everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big six markets and formulate an attack plan for tomorrow's trading. Now, when we're looking at getting a kind of a forecast of what to expect, well, tomorrow is the last day of trading for the week before we go into the holiday weekend. We also have a couple countries that have holidays tomorrow, so it's anticipated to be a little bit of a slow, grindy one. So because of that, the analysis for today, it was really slow. There's not going to be a whole lot to talk about. We're also going to take a look at a couple extra bonus ones for you, taking a dip into the cryptocurrencies to see what's going on there, since over the weekend, we're still going to be able to trade those, and they are blowing up, for lack of better words. So keep that in mind when we're going into the the weekend, the long holiday weekend. Lots of traders might not even show up tomorrow. Now, as always, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join Me Daily Outlook newsletter. That's going to give you the opportunity to add your email to our list so you know every single time one of these videos comes out, it gets sent straight to your inbox. We also talk about different statistics, different information, different stocks, cryptocurrencies, Forex, all kinds of different stuff on here. So it's a great newsletter to get your hands on. Of course, also every morning and every afternoon in the blog section, we post the live trader morning prep levels for all of the major levels of support and resistance, and we also post a psychology or trade video in the afternoon, so be sure to check those out. If you haven't done so already, click on the live trade room subscription and trial info, and from there you can sign up for a one-day trial with us in the live trade room, so you can sit down and see what we do every day. Even if it is really slow, we still have a lot of good information and a lot of good potential opportunities to trade along with. So while you're kind of dealing with some of these slowdown markets, it might be nice to have a little community at your back. So give us a check out and sign up for that daily trial. If you like it, you can always sign up for a week or monthly subscription, and of course, if you join as a full-fledged VIP member, you get the live trade room as part of the package. Now, looking at the bund for the most part really didn't go anywhere. We started off right here, and we are closing here, so it is a nice bull candle with wick on both sides, right? So this is kind of a balanced candle, if you will. The wick on both sides, about the same. The open and close, the body itself smack in the middle. Just kind of a balanced day. Overall, we do have a bullish bias on the day, but not by a lot, mostly just kind of a range, buy low, sell high, general scenario that you would expect. If we zoom out a little bit further, we can definitely see that we are starting to push in towards that area of support underneath us, but we haven't quite hit it yet. It actually kind of looks like they're using this intermediary low and finding support off of that instead. Looking across the highs, we had a big high side failure up at that 162.02 area, and really haven't given much of a thought of coming back to the highs. We are starting to break out of the channels. You can see drawing it this way, they broke, drawing it this way, they broke, drawing it this way, it's breaking today. We may just end up having that big bullish rally back up towards those highs if they can't, if the sellers can't hold this down. At this point in time, though, all things considered, we are in a range. We're looking to buy low, sell high, stay out of the middle, and right now we're kind of in the upper middle. So looking for a little bit more bullishness and then potentially selling at the top here, 161.13 down to 11, or if we get a dip down, buying at the lows, 160.79 down to 77. Over on the euro, again, very range-bound, not really a whole lot going on for most of the day. The FOMC meeting minutes obviously had a pretty big impact on that. They did finally start getting away from it at the end of the day with a nice attempted breakout to the upside, but for the most part, really didn't accomplish a whole lot until the very end. So with the daily candle, we're going to be opening here and closing here, and that is going to be a very sturdy daily candle with very little wick on the top, most of the wick on the bottom, showing that the buyers did dominate the day. But what that daily candle doesn't show you is they didn't really show up until the very end of the day. So it's kind of a little bit of a clue, right? This is the nice thing about looking inside the candle like that. With a 5-minute chart, we can see that consolidation and chop and slop that the daily candle doesn't. So although it is a very strong bullish daily candle, well, we might be in store for a little bit of chop there as well. We are setting up a little bit of kind of an ugly looking head and shoulders pattern. We have the left shoulder, the big head, kind of a two-headed sort of pattern here. Shoulder, two heads, and then we have the right shoulder forming now. That could form, we'll call it an alien pattern, right? To the downside, a head and shoulders pattern to the downside looking for continuation. One obvious thing that we are seeing, though, is this level of support down here is still holding. And until the sellers are able to break through that, they're going to have a heck of a time keeping anything going. So one big thing that we can definitely consider, especially now with that rally higher after FOMC, that gives us an area of support in the form of a channel or a trend line at the bottom. And that also gives the buyer something to work with if it does come back down to those lows. Off of the highs, we had a situation where they were holding the top of it, but the FOMC broke it out, so we're not really showing a whole lot of emphasis there anymore. That does create an area of interest, though. We break out, pull back, that would be that kill zone level to start buying not only off of that cross, also major support and resistance cutting across the middle there, but also that level at the bottom. Everything stacking up in the exact same place, and that could lead to a very big move if we can get that nice deep pullback. In the interim, we do have a couple other pullback areas to keep our eyes on for buyers at 12.090, 12.025, and down to 11.935 to 940, kind of in the middle there. So plenty of opportunity for the buyers and sellers to kind of play around with this, but the buyers overall have the short-term emphasis until they can break down that major support. Switching gears over to gold, gold's another market that really didn't get a whole lot done until the FOMC meeting happened. We have a nice rising area of support now, major levels of buy support after that rally higher, and that is going to be closing a very strong daily candle. So looking for pullback buys down to 1253.2, 52.2. The low of that FOMC candle at 50.9 is an area of interest as well, and then of course at 1250. All of those areas, one thing to really keep in mind, if we draw this up as a channel, the FOMC blew through the top of that channel and didn't even pay attention to it. Now, a lot of times that could just mean that this is the start of more of a midline. If we draw it like this and then pop that on the highs, it does look very good as a midline of a larger channel. But this also could be a concern for the buyers that have the inability to continue, that could fail all the way back down to not only the lows of the channel, but that would be seen as a breakout above, which usually means an equidistant breakout of the lows. So it's kind of a little bit of a kind of an interesting scenario that we're finding ourselves in on gold here. The buyers have to hold if we start pulling back, and if they can't, we could very well find ourselves at the low of that channel again and possibly even breaking down. Over on the bonds FOMC meeting minutes push the market higher into a large wedge rising up and closing near the top of the day. So very strong daily candle here as well. Major resistance coming in the form of that several bottom low down here from yesterday. We are coming back into that area as resistance now, and the market seems to be responding to it quite well. Overall, we do have that nice wedge grinding higher and lots of pullback areas to buy into. One of them at 153.17, then at 153.15, all the way down to 153 down here at the lows. It's going to be 153.09. So plenty of buying opportunities to look on a pullback after that FOMC rally higher. It's just a matter of how far they want to pull back. On crude oil, a little bit of a different story. The API candle right there and right there, that was from yesterday. The inventory really didn't have much of a reaction. It was a 30-cent inventory candle, is almost non-existent. So a very weak, lackluster inventory. They did come in agreement, and it was actually significantly larger draw than they were expecting at -5 or so million, and 5 and some change. The API was forecasting -1. The forecast for today's inventories was at 2.5, and it came out double that, but really not much of a reaction. Not to mention that the holidays are right around the corner. A lot of times you see gas prices kick up a little bit around the holidays. Well, we're just kind of balanced right now. Crude's not getting a whole lot done. We opened up right here, and we're going to be closing right here, and that is going to be a very ugly daily candle. Most of the wick on the highs, but a decent amount on the lows as well. So mostly balanced with a slight bear tone to it. Now, we do have a nice wedge that's forming. We're kind of getting pinned here a little bit, and arguably you could even draw up the wedge a little bit tighter now. But for the most part, we're just kind of getting stuck here. Rising support is getting out of the way. We're breaking underneath it, and that could be looking for one more leg to the upside. Notice a crossing area right there. That looks like be about a 50% as well from the high to the low, and a lot of traders love those 50% levels. So that area right inside there is the location that you're looking for a possible kill zone short to drive the market back down. The overall bias on the larger term time frames, of course, has been bearish for a long time for the daily and all of that, but looking on the 5-minute zoomed out, pretty bullish still. So we have no reason to really want to do anything but buy, and if we can get a dip down into this buy area, I would much prefer doing that rather than selling up here. It makes a lot more sense to be a buyer given this overall trend. And then finally, the S&P 500. The S&P, very, very range-bound. The S&P was brutally slow today. If you were trading the S&P, I hope you either brought a Red Bull or a pillow, because it was not fun to trade the S&P today. Now, the overall movement, very solid in terms of a range. They had very defined highs and lows, small little ranges inside there, widened out to a larger range. Looks like the best fit is around 99.5 down to 97. We are pushing back into that 2400 level and breaking out above on the FOMC with a nice bullish wedge. We're looking for a pullback, right? We want to see them pull back and give us a better price to buy into so that we can get in as cheap as possible. That's going to be anywhere from that big round 2400 mark down to 99.5, a retest of the range. And if we can get it even lower than that, around 98.25 down to 97 even. But either way, looking to be buyers, just preferably on a slightly larger pullback. So that's going to do it for the futures markets. Before we jump on into the cryptos, taking a look at the news for tomorrow, we have at 4:30 tomorrow morning out of the UK, the GDP quarter over quarter for quarter one and year over year for quarter one. 0.3% is a forecast and 2.1% is a forecast respectively. And that's it. Right, so as if we needed another excuse to believe that tomorrow is going to be a slow, grindy chop fest, we don't have any U.S. news tomorrow. There's some small things, but no big U.S. news tomorrow. And really, the only big news coming out tomorrow is out of the U.K. So it's going to be a little bit of an iffy one tomorrow. Just play it really safe. So diving into the cryptocurrencies, we have a couple of them that are of pretty big interest here. So obviously, the first one on the list here, taking a look at the cryptos, we have Bitcoin. Now, as if it needed to be said, if you haven't seen it on the web, all over the place, everywhere, all the time, we are going higher, right? Bitcoin is rallying like crazy. We broke through the 2400 level. Now we have the 2500 level, not too far away, and we're starting to push up and getting closer and closer. That 3000 level doesn't look like it's that much of a stretch anymore, does it? Now, the overall momentum to the upside is very extended. We've had very little confirmation in terms of, a pullback. The only pullback we had was this beautiful little one back here, and that snapped down to the moving average and bounced right back off again. So that's really what we're looking for right now. With such an aggressive rally to the upside, I want to see a pullback. Whether it's fast, slow, I don't care at this point. I just don't want to buy all the way up here. Notice one very obvious thing, the stochastic is staying embedded in the overbought area. Overbought area. We're just pinned to the highs. We're almost always staying above that 80 mark, and this is a 60-minute chart, right? This is an hourly chart, and they still can't get a pullback. So, assumably, we're going to get some profit taking at some point. A lot of times, traders love taking profit at big round numbers, and that means that 2,500 is next. So very assumably so, we're going to be seeing some profit taking at around 2,500, and that could be that pullback that we're looking for. So looking for a pullback at least down to, that 2374 area. I would love to see a snap back to 2219, especially if we get it down to 2076. That would be a very happy camper to get a pullback all the way down there. But over the weekend, well, we'll have to wait and see. At this point in time, though, at least a pullback down to 2374.05 or so, if you want to get really specific, for a potential buy on Bitcoin. Over on Ethereum, Ethereum has been rallying as well. Now, if you were watching the Outlook letter from yesterday, we were talking about Ethereum right here and looking for a new high push, so hopefully you grabbed that one. It did make it almost all the way up to that 200 mark to stay above it. It hit it. Didn't stay above it, though. So beautiful buy signal off of the newsletter from last night and good continuation of the upside. Ethereum is finally pulling back a little bit. We are testing the moving average at around 186.85 as we speak. I would like to see a little bit of a deeper pullback. It did the same thing that Bitcoin did with that quick snapback and then right back higher. I would love to see the same thing again. So 186.84 is the earliest that we have, but I wouldn't mind seeing a little bit lower at 164.70, especially down to that 141.10 area for continued buying pressure to the upside. Very strong market here on Ethereum. And then finally, Litecoin. Good old Litecoin, right? We've been talking about this one for a couple weeks now in the newsletter and looking at a long-term potential buy, and it is finally ripping to the upside. This is what we wanted to see with more continuation higher. Everything is looking really, really good. The one big level that we have to keep our eyes on is right there. When Coinbase announced that they were going to allow Litecoin trading, it doubled its price in an hour. Just like that, really fast. Came all the way back down, and now we're right back up again. This area right around that $36 mark is a big, big level of support and resistance. If we can break above that, we should be looking good for more continuation to the upside. So that's going to do it for the markets overall. Lots of stuff going on, and we have a whole lot of nothing going on tomorrow in terms of news. Did I get you juiced up there? Yeah. Well, there's not a whole lot going on tomorrow. So be very careful tomorrow going into the holiday weekend. Enjoy the holiday weekend. Spend some time outside if the weather's nice. Spend some time with the family, and just kind of rest up and get prepared for the following week. So. As always, make the plan, trade the plan, follow the rules. We'll see you next week. Have a good one all, and we'll talk to y'all later.